Hello and welcome. You're with us here on Markets Next Week, your one-stop shop for important cues for the week ahead and, of course, the key highlights from the week gone by. Let's start off with the key market action. Shell's going to take us through how markets fared this week and what to watch out for as we head towards expiry. Shell?
Right, so let's start off by taking a look at what happened in the markets in the last week. Monday and Tuesday were the 2 days when we saw an upward move. Wednesday, Thursday and Friday is when we saw most of the gains of the first 2 days being given up. And in fact, the Nifty going ahead and ending in the negative by almost 1%. Taking also a look at the stocks which really fell, the one sector which definitely deserves a mention is the Nifty PSU Bank Index. That's the one which went ahead and saw a fall of almost 6.5%. And quite a few of the stocks from the PSU banking space did not have a very good trading week. Amongst the other losers, there was Bank of Baroda and SBI, which definitely stand out. SBI will be announcing its earnings in the next week. Adani Post and Lupin were also a couple of other stocks which did not have a very good week. On the gaining side, ITC was the top gainer, followed closely by ONGC, probably on the back of higher crude prices that we have been seeing in the last couple of weeks. Dr. Reddy's, Yes Bank, Bosch and Maruti, both from the auto space, also ending the week in the positive. For the next week, largely there's no major data coming in apart from the core sector data. Besides that, there will be a whole slew of earnings. Quite a few stocks from the Nifty which will be announcing their earnings. I'll run you through a few of them. SBI being one of the top ones, which will be announcing its earnings on Friday. The three oil marketing companies, HPCL, BPCL and IOC. Besides that, Tata Steel, L&T, Coal India, M&M, all these companies will be announcing their quarterly earnings. So it'll be very interesting to see how the market reacts to all of this.
Mayuresh Joshi also joining us on the show today, fund manager at Angel Broking. Mayuresh, a very cautious week in trade, even though we've managed to sustain around 7750. Global cues are also looking a little shaky domestically as well. We were tracking some key earnings. How are markets looking to you at this juncture?
So largely, I think the markets are expected to still stay in a very consolidated kind of a range. And what we are seeing in terms of global volatility, it is going to play out on the Indian markets as well. Clearly, there's a risk off trade that is happening at this point of time. With whatever data points we've actually got through from the US markets, the hawkish commentary that the Fed has given the possibility of a Fed hike happening in June. What happens with Brexit in June is going to be a huge determining factor as well. The weak Chinese data, on the other hand, is not making things easier for the emerging pack. So the dollar strengthening, the emerging currencies weakening, the risk of trade is carrying on. So my own sense is the markets here in a range. I think the consolidation might well continue. And again, I think over the next few weeks, we'll be talking about how range will take place specifically in the Indian context. And again, I think the talks of GST will start resurfacing. But in the immediate short term, over the next few weeks, my own sense is that the markets, as for the better part of me, I think we'll be largely constrained in a consolidated range.
Right. Dismal numbers this week, Mayuresh, from the likes of BOB, Punjab National Bank, even some of the mid-cap PSUs. Are watching out for SBI next week. What are you pricing in for SBI? Do you see asset quality once again being a major concern? Of course, with SBI in particular, we also had a lot of other news this week with regards to the merger of some of its associate banks. But what do you feel is the outlook on the banking major right now?
So largely, I think if you talk about SBI, the asset quality pressures might well continue into Q4. And if one really goes by what the management had indicated in Q3, the slippages will still continue, both in terms of how the AQR provisioning will take place, as well as slippages from the restructured book as well. The bank had also guided for 525s and SDR. And again, I think the kind of provisioning that the bank will do, I think that will be a very interesting aspect to look out for, because a lot of the public sector banks have actually provided for a lot more in anticipation of whatever might go into slippages over the next few quarters. So at least on the asset quality side, which is the pertinent feature to be watched out for PSU banks, including SBI, I do not foresee anything which is significant in terms of improvement happening in this quarter. But the management commentary thereof in terms of expectations going ahead, in terms of both improvement of the book, as well as how they'll manage their credit costs. And at the same time, I think the merger that you were talking about, I think it will still take some amount of time. I think it's not going to be a process which will happen over the next 2 quarters. But clearly, yes, I think if you're looking at numbers from a Q4 perspective, numbers equally expected to be soft and tepid as Q3 were. So again, I think it will largely depend on what kind of provisioning the bank does and what kind of management direction in terms of asset quality going ahead, as well as credit costs.
Okay, a couple of, kind of heavyweights that really took a knock as well. Let's talk about Lupin. Huge concerns raised with regards to the earnings. The stock took a complete U-turn after initial uptick and ended, in fact, on Friday down about 9%. What did you make of those numbers, Mayuresh? We're also expecting other key earnings from the pharma pack going forward. But Lupin in particular, how did you feel about those earnings?
No, I think again, if you talk about Q4 numbers in particular, I think the numbers were reasonably better than what we had expected, both in terms of how the top line has grown, how the EBITDA margins came out, and equal performance on the bottom line. However, I think the larger picture, as the management indicated, was what happens with their Goa plant, and Goa is one of the key facilities for Lupin in terms of their key approvals expected to come through. One must really understand that Lupin has a huge ANDA pipeline in terms of 220 odd applications, 124 approved, more than 35 FTFs. You're looking at a value size of the complex generic market of any between 14 to 16 billion odd dollars. Now the Goa plant overhang in terms of what will come through and when these remedial issues will finally take place, I think is going to be an overhang onto the stock, and that again has a telling effect in terms of what kind of product launches can come through from the Lupin stable. So clearly I think whatever expectations of earnings in terms of a 14-15% growth over the next 2 years, that probably gets muted, that probably comes down in terms of an FY17 perspective. So my own take is that the stock will remain under pressure on account of what happens probably with the Goa plant and the management commentary thereof.
All right. Mayuresh, let's also talk about, some of the other earnings that we saw. Highlights, ITC also came out late on Friday and surprising the street, more or less in line, but particularly on the growth on the cigarette front was definitely a beat. What did you make of those numbers?
Well, yes, I think on the cigarette front, ITC did surprise because a lot of analysts on the street were either expecting a flattish kind of a volume growth or in fact a negative volume degrowth to happen. But I think the surprise came through the cigarettes business, both on volume terms as well as how the EBIT performance for the cigarette business has been. What also surprised the street probably at the end, fag end, was probably the bonus announcement that ITC has come out with. And again, I think the other businesses have done reasonably better this time around. So if you talk about the agri business, I think that's held up pretty well. The other businesses have shaped up pretty well. But again, I think one really needs to understand the management commentary in greater detail. But yes, I think the numbers, at least on the cigarette volume front, the EBITDA front and the EBIT front for the other businesses have been quite encouraging this time.
Okay. From the auto pack, Bajaj Auto will be posting numbers next week and a strong quarter expected from the two-wheeler major. Let's in fact get Hiral in on what's expected this time around.
Bajaj Auto is expected to post a stellar quarter. If you see the headline numbers, revenues are seen up by around 11% at 5,240 crores. Profits are expected to improve to the tune of almost 29% and come in at 803 crores. Margins are also seeing an improvement, and that number is seen at 21% versus a 17.7%. If you see the two-wheeler industry, that has registered a significant growth of almost 8% on a year-on-year basis for the quarter, and this is mainly on the back of lower volumes in the previous year. If you see the overall volumes, we are expecting an increase of around 11.5% on a year-on-year basis for Bajaj Auto. However, sequentially we can expect a degrowth of around 8%, and the volume growth is mainly driven by a 26% growth that has been witnessed in the domestic market. However, the exports have seen a decline of almost 6%. The overall motorcycle volumes expanded approximately 12%, and the three-wheeler volumes rose around 9%. We are expecting realizations, however, to decline to the tune of almost 2% on a year-on-year basis. However, sequentially a growth of around 2%. And in terms of the three-wheeler export market, pricing has been under pressure due to increased competition by TVS in the African markets. And the margin expansion is mainly on the back of lower raw material cost as well as operating leverage benefits. If you see the raw material cost as a percentage of sales, that is expected to come in at 66.5% versus a 67.5%. And the key things that we will need to watch out for will be the export demand, especially in the Nigerian market, as the company has been facing forex turmoil in Nigeria, and Nigeria accounts for almost 30% of the two-wheeler exports and 12% in terms of where Bajaj Auto's revenues are concerned. New launches as well as the product performance will be important, as well as the response to the recently launched Wii, the update on RE60 launch in terms of the export markets, their FY17 launch pipeline as well as the performance of KTM, and lastly the demand environment as well as the outlook for FY17. So all in all, a stellar performance by one of the two-wheeler majors.
Mayuresh, we're watching out for Bajaj. We're also watching out, for some other numbers from the auto pack. Ashok Leyland as well on the radar there. What's on your list in terms of favorites from the auto pack currently?
Again, a lot of these auto stocks have moved up in anticipation of volumes improving, not just on a month-on-month basis, but on a quarter-on-quarter basis. But one really must understand what we're looking at. So in the two-wheeler pack, it is more of expectations of how recovery will happen, both in terms of volumes picking up as well as earnings picking up. For Bajaj Auto, I think a major component, in fact 50%, comes through from the export market, and we had seen some amount of pain in a few key export regions. But again, I think that pain is expected to reasonably get a little sorted over the next few quarters. Even on the domestic front, if monsoons are much better, I think Bajaj Auto's numbers will start looking much better than what one really expects. Again, I think the market share is what the management is looking at, and if the market share gains are made over the next 3 to 4 quarters, that augurs well. But again, I think one really needs to look at what kind of EBITDA margins they post, whether the expectations of 20-21% are met by the management this time around on the street, and whether this operating performance can get guided into the next few quarters. For Ashok Leyland specifically, I think the MHCV sales have held up pretty well. What happens on the LCV side of the business is going to be equally important, because that is one key element that is probably dragging the consolidated numbers, both in terms of volumes as well as realizations. What happens with the discounting factor is an important aspect to be looked at. There are almost a 210,000 odd discount that was coming through the last few quarters. Whether that has reached the peak, the management commentary thereof will be key and very, very important. And again, I think the aspect of how they're looking at volume growth, specifically from an FY17 perspective, and again margins, I think with a lot of input cost deflation happening, margins expected to be in double digits for Ashok Leyland. Whether they'll be able to guide towards that in the next 2 years is an equal pertinent thing to be noted and observed.
Okay, a whole host of earnings next week. Bosch, of course, one of the big movers this week, will also be reporting. We'll have other heavyweights like Tata Steel, L&T, ONGC and Tech Mahindra also reporting numbers. But Mayuresh, I want to ask you before we let you go, in terms of the broader markets and mid-caps, anything there that caught your eye? Lots of stocks that did deliver good numbers, some that didn't. But even in terms of themes, we saw logistics as a theme start to pick up post those assembly elections, for example, among other things. What have you been tracking when it comes to broader markets?
I think a whole host of companies did deliver a good set of numbers, whether they were housing finance companies like LIC, Divan, in my opinion, delivered a very reasonable set of numbers, and the outlook there looks very promising in a scenario where interest rates are coming down, their cost of funds are coming down, and where the advances growth specifically on the retail side looks very encouraging. Mahindra Lifespaces, in my opinion, gave a very decent set of numbers. You saw a couple of numbers yesterday which were pretty decent as well. So JK Lakshmi Cement, in my opinion, delivered on all accounts in terms of how the volume growth has panned out, how realizations have been, and even valuations at the current juncture seem pretty attractive to the kind of performance that the company has given out. And if one really expects cement as a theme to do well, I think a whole host of cement stocks can actually do well. Pidilite came with an exceptional set of numbers, in my opinion, with EBITDA margin expansion in excess of 19%. And the kind of market leadership that it has got, both in the bazaar industrial segment, I think that is very, very commendable. So I think the management commentary thereof will be equally key in understanding how volume growth is expected to pan out. And again, I think even if margins come down a tad bit because of the input cost pullback that we've probably seen, it will more largely be offset with volumes and realizations improving as monsoons improve, the industrial capex activity picks up, which will have a telling effect. Again, but the valuations again is one key pertinent thing to be watched out for mid caps. In a whole host of cases, I think the stocks have moved up in anticipation of earnings improving quarter after quarter. So trailing valuations need to be taken into account, and a bottom-up approach is required to be followed and mandated when it comes to mid cap stock picking at the current juncture.
Mayuresh, thanks so much for joining us on the show today. Let's take a very quick break. Up next, Larry Fink criticized the governments across the world for their over-dependence on monetary policy.
I feel bad in criticizing Kuroda-san or any other governor, because I believe the central banks are the only game in town.